What if I record every single trading day of my life for you guys for educational purpose? Hello guys, welcome back to the channel, and in today's video I'll be showing you something different. Alright, so this particular trade, I took this trade since in the morning during London session, and then it is still running with my few community members that I'm preparing for the mentorship course that will be launching in the month of February. So we took this trade together today. So it is a swing trade top-down analysis I want to show you right here. Now, it is important you get to know the difference between a swing trading and then intraday trading. A swing trading looks up to giving you so much advantage and giving you so much reward in the form of pips movement, as opposed to the short trading you do intraday, maybe during the London kill zone or during the New York kill zone. So let me show you every single analysis I did before taking this trade straightforward. Now, if you're new here, this is something I do every day. I make sure that I record my live trading analysis with you guys so you would be able to learn from it. All right, so the recordings are right there in my YouTube channel. You can subscribe, you can check it out there. Simply come to my YouTube channel, go to playlist. So every day there is such kind of video coming to you. If you come to this everyday commentary, that is where I normally put it. So coming back here early in the morning during London session, I woke up and then I went straight to my DXY. DXY is the king. And if you've been following me, on Monday I shared an analysis with you guys showing you what I'm expecting the DXY would do. All right, so let's take this further. All right, so look at this. On Monday we did it from the daily time frame. So on the daily time frame, what I looked out for was a sweep of liquidity above here. This was Friday. You see, this is the daily time frame. This was Friday, this was Monday, and then Tuesday price started coming down, and today is Wednesday. This is what we are seeing. Now look at what happened. Sweep of liquidity above here previously, right here, and then sweep of liquidity above this level. So we have two areas where price has completely swept liquidity, which is telling you that external range liquidity has been completely cleared. It has been cleared, and after external range liquidity has been cleared, what else do you look out for as an ideal ICT concept trader? Is to look for price to come into an internal range liquidity, which is mostly around this institutional reference point, a fair value gap, or an order block. All right, so we have an order block here, which is a bullish order block. But the only reason why I feel price would prefer to bounce from this bullish order block before going up, which will take almost 2 days, all right, today and tomorrow, maybe through Friday, before it reaches there, is because the order block is the only institutional reference point among these two that is in the discount area. In the discount area, which price will prefer to use as the point of interest before taking up again. So 50% of this order block, because the order block is big, so we use the mean threshold, which is the 50%. So this is the area we are expecting price to come to. If we are to measure the pips movement from here to here, is about what do we have? It's so much movement, 50 something pips movement. So if this movement is going to come to that level, we are going to be bearish on the DXY, and that is why if you go to the 4-hour time frame, you would see that the DXY has even given you a shift in market structure to the downside right here. You can see this to the downside on the 4-hour. You have this shift in market structure, and then you see price coming down. You see a quick reaction from this point because it has touched that fair value gap on the daily time frame, but then you should not be caught up into believing that price will start going up immediately, because there are better institutional reference points on the downside. So look at this. Price is coming to locate something very powerful. This is a breaker block that I want to show you. This is it. Let me show you. Can you see this? A breaker block. Boom. That price may most likely go into, and check it out. So this is it. This is a bullish breaker block right here, and price is coming right to that bullish breaker block, which I believe is the point where price wants to come to. All right, as we are watching it. So in this regard, before price will come here, it means we are going to keep coming lower to this area where there is a breaker block, and then likewise there is this very big liquidity void that price has not traded yet. So this is the only reason I believe price is going to go lower, except otherwise, but this is what I'm seeing price doing, price coming to this area. And that is why I went to Euro USD with my community people, I told you. So I decided to go to Euro USD straight away to look for an opportunity to take the trade. Now, normally when I go to Euro USD, what I do is to look for the London kill zone strategy to take trade. The London kill zone is simple. You look for a sweep of liquidity above what has happened in Asia, and then you look for a shift in market structure and take the trade. But then a different thing happens today. On the 1 hour time frame, you see, every time you're trading, you need to be flexible and dynamic in your approach to the market, and then you can be consistent with your rules and your trading concept. So look at what happened. Price was coming down throughout Friday, down to Monday, Tuesday. Today is Wednesday. Are you interested in looking at this from the premium and discount area? Who in his right mind, knowing ICT concept, will be selling from a discount? All right. So this is the simple reason why I did not consider going bearish on this simple market analysis. So I said, okay, today we're going to do swing trading. We're going to target high risks to reward. High risks to reward. We just look for a swing trade. Swing trade can give you up to 100 pips. And it's mostly from the 4 hour time frame and 1 hour time frame, and sometimes the lower time frame for a smaller entry. So I saw this shift in market structure to the upside right at this point. This is a shift in market structure to the upside, market structure shift. And I said, okay, if this is the case, we have a shift in market structure to the upside. That means price is going to fill up this place. You see this liquidity void and this balance price range that was above here. We have a balance price range here, and it is just two fair value gaps that are overlapping on each other. And mostly the middle of that particular confluence is the point that price may most likely go to. So I was saying, okay, we're going to swing trade. We're going to take the trade from here and we'll target this place as our take profit area. So it's almost about 100 pips from where I shot them. So from this 1 hour time frame, we drop down to the 15-minute time frame. Now, don't be scared because you see this quick, push down, maybe some kind of a reaction coming in. But then I saw this trade coming in since from here. That was when we took the trade. When we saw this price action in the morning, that was London session, we saw price coming, and we saw this break of structure to the upside. All right, break of structure to the upside. And then, right from there, we saw price coming back. There was a fair value gap here, inside here, but that fair value gap is also lying close by this bullish mitigation block. This is a mitigation block right here. Let me show you. This is lower than this, so that is a bullish mitigation block. And then there is also an order block here. This order block. So this order block, 50% of that order block will be a very, very good point for that entry. But there is another thing in the 1 hour time frame that I also was watching on the 1 hour time frame. So somebody was asking me, why not take the trade on the discount area, or in the discount area rather? Why not take the trade in the discount area? The only reason why I don't consider the discount area is because look at the price action here. Just take a look at the price action and see what you could see there. Price coming. This order block, can you see this black candlestick? It's an order block, bullish order block. Notice how price have traded into it. Almost all the order blocks, including this one, have been mitigated. You see price coming back into them. The only thing left unmitigated for us was this fair value gap. All right. And then this one, which price has finally mitigated. So we also have, this is a breaker block on the 1 hour time frame. A very perfect one. You need to pay attention to what is happening. A breaker block right there. So if you pick this line to see, you could see that this is lower than this. So that makes it a bullish breaker block. So I actually told them that we are going to take trade from here. Since it is a swing trade, we're going to expose ourselves to so much risk. Almost 30 something pips stop loss, but then it worth it for 100 pips target. So the only thing I asked them to do was to, if you're entering with 5 standard lots, you can slash it into 2.5 because your stop loss is big That's almost twice what you could have used as stop loss on a normal day. But since you're swing trading, you want to put your stop loss right down here, and your target is going to be right above there. You know, this BPR, the balanced price range. And this is the reason why we took the trade straightforward. We want to leave the trade to run through today, tomorrow, next tomorrow, up to Friday. All right. So that was when we saw this price action happening up to what is happening now. And price is just trying to react to this area. You could see that this area was something else. Once you break above here, price is going to go up. All right. Price is going to go up. So price just came here and quickly crashed down to that level. And since we are swing trading, we don't want to remove our positions. We just want to watch it out. We are still in profit. We're still in profit watching the price action happening. So price just came back to this area. Want to watch it go up again and continue the upward movement as it has started right here. So guys, this is the simple strategy we use for this swing trade before entry, and I thought I could share with you guys the reason why we took the trade. It keeps running, then we will see how it goes over the week, and it can reach tomorrow, it can reach next tomorrow for the price action to completely deliver to this area. So guys, this is all about it. Thank you very much for watching. See you in another video. Make sure you subscribe if you want to see more of this analysis. Thank you.